Hello traders, The title of the video is Gold Resources, Stock Analysis, Proprietary Trading Tips and Tricks. We're going to use my own proprietary trading tool to analyze gold resources. The epic for gold resources stock is GORO, Golf, Oscar, Romeo, Oscar. All right. It's a gold producer. All right. And I'm on a daily chart. I'm going to go quickly to the monthly chart. We're going to use what we call the 6 critical price level. Those are my own proprietary trading tool. So what I'm going to do this time, we're going to concentrate on how to trade it after drawing the 6 critical price levels. All right. So we draw them on the yearly chart. I'll come back to that. Okay. And I will touch upon it very fast for those of you that are not familiar with the 6 critical price level. And also I will refer you to the website where you can learn more about the 6 critical price level. All right. So I've drawn them already on my chart. Okay, they are here, the 6 critical price levels. And the most influential critical price level, as I say to traders, is the smart media line, or the 6 critical price level, number 6. All right. So that's the orange line here. Okay, that's the most influential, okay, critical price level. Usually, if the price goes from above and deep below the smart media line and final resistance, it usually become bearish. But if it goes below, all right, the smart media line, but quickly return back above it, it means that the bearish momentum is diminishing, and we can look for an opportunity to buy. So how do we trade it? I have one example here where I draw it on the yearly chart as we do. Now I'm going to go quickly. You can see that the stock was going down since the highest point here. It just went down big time, and now it's slowing down. This is a high volatility. Was it volatile for you? Long candlestick bar is representing volatility. All right. So just looking at those 3 candlestick bar, we can see that it's a little bit volatile for this stock. All right. And now it's slowing down in a low range candlestick bar. So using the market principle of low volatility, high volatility, we will say that there is a possibility that we may see a reversal at one point, provided that what? The fundamental are solid. So when you are using the 6 critical price level, you must also perform what we call the fundamental analysis. At least perform the Google Acid test. Check at least the story relating to this stock, why this stock was going down for so long. Go to Google Finance, go to Yahoo Finance, read the news relating to this stock. Not only that, stocks that are competitors to this company, all right? Check their news also. What's happening in that sector? What's happening to gold? It's because these are gold producers. All right. So this is it. So you do your fundamental analysis, or what we call your due diligence. And then with that, if you know that, okay, the story is good, it's more likely to, the future is looking brighter for the stock, then you draw your 6 critical price level, and you are looking now for technical trading setup. So enough of my blah blah blah. Okay, on the daily chart, so we go from the yearly chart. I don't want to waste your time. I could have gone to the monthly chart before coming to the, I can go, okay, yearly chart, monthly chart, daily chart. That's normally what one can do. But now I'm going directly to the daily chart, looking for trading setup. So you can see that smart media line, which is the most influential critical price level for this stock. In fact, the level is in a zone of $4.69. So it's showing here $4.66 in that zone. Okay, in that zone. But if you want to calculate it, I will show you how you calculate it exactly. So you may find the exact value of the smart media line. So I'm just using that level. That's the zone is. So I'm happy with that. Okay. $4.69. Okay. That's the way I want to call it. Okay. So that's the orange line there. So have we got a trading setup there? So what is happening on the daily chart? The price is in a declining channel. Can you see that? So it is going down. It came from above and crossed through it. After going below it, now it's turning around. Now, the good news is that the prime managed so far managed to come out of that declining channel on the daily chart. Now, for it to be confirmed bullish, to start becoming a little bit bullish on this daily chart, something like this, okay, forming a kind of a head and shoulder chart, an inverted head and shoulder chart pattern, will be something that a lot of traders will be looking up to, will be expecting. Doesn't mean that this is what can happen. So you see, I'm going to come back to this in a minute. You see this line here. So something like that will be good. Now the price can do something completely different, which means it can go above, straight away above the media line before pulling back a little bit below it before running back. Those are just expectations. So we are preparing ourselves for things that can happen. But another scenario, the price can also find a resistance here, you see, because people were selling on the edge, but it may come back inside that declining channel and then continue to go down more. Bounce up again and then roll it down more. Okay, so far we haven't got any bullish signal. We had before bearish trading signal on the daily chart, but now the price has stabilized a bit. Okay, from this point onward, going back up above the declining channel on the daily chart. Okay, but I have drawn on the daily chart. So apart from this, so how do I draw this trend, this channel, this point connected to this one? You draw the first trend line, and then you just choose one point here, any point. I just draw it roughly here, choose one point here, and draw a line that is parallel to the first one here, and then you have a channel, and then draw the media line. Okay. Now that the price breaks above that channel, we can project it up, measuring the width of that initial channel, and then we can project it up. The reason why we are doing all those projections is just to find the best place. If we see a trending setup, we want to make sure that it's happening in a good place, on the edge of a trend line, on the edge of a key level, on the edge of any of those 6 critical price levels. All right. Now, I mentioned also to you this channel here. This channel, you see, there's another channel that I draw on the daily chart. I want you to do the same thing for this stock. And I'm going to explain to you how I draw that channel. So all I did is very simple. You see this point here on the daily chart. I connect it to this point here, one of those points there. And I draw that first blue line. And then I just select this point here, and I draw a line that is parallel to this blue line here. That's how I draw that channel. That channel is a very important channel. Have it on your daily chart. And then the next thing that I've done, I measure again the width of that channel and I project it down, bringing me here. I can draw for each of those channels a media line, okay, all right? And for this one also, I can draw another media line, okay, all right, for that. So do the same thing. And then once I projected that channel, it's bringing me here. So that's it. All right, bringing me here. That's it. So draw the first the bearish channel and then draw that channel here and project it down. So the reason why it will be nice for a lot of traders that are thinking. So if you check the fundamental, you know that the story is good and you want to buy, okay, your due diligence, okay, is satisfactory. It has passed the Google Assist test. You read the story, blah, 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 blah. Okay, you don't want to be buying something and the thing's going down. So you want other market participant, fundamental trader, hedge fund to be willing to join you. So you don't want to be the only person buy if you want to buy. But if after performing the fundamental analysis is bearish, well, we have to look for good reason to sell it on the edge. So after projecting that channel, all right, you see that's why I was saying to you, it would be nice. You see what I was saying to you, go up a little bit more, which means deviation from this channel. that will indicate to us the strength of the bullish momentum that is developing. If you go away from it a little bit and then nicely pull back on the edge of this blue line somewhere there. There are other critical price level in that zone. You get a message? So after drawing the 6 critical price level, one can look for a trading setup, as I'm doing now. Draw a line, draw a channel, as I'm doing now. Look for chart pattern and so on, either on a monthly chart, and then you want to use a different time frame trading method, or use the TSTWSYS008 for swing trading, or TSTW 24 for day trading. You must use a different time frame trading method. Okay, so this is about how to trade it after drawing the kilo. So for those of you, so I want to touch upon again one more time. Okay, so you see the projection, the expectation, okay, the practical way to handle it without assuming anything. Now we're going to go to the 6 critical price level very fast. So the first critical price level is what we call CPL1. Okay, Charlie Papa Lima. CPL number 1. CPL stands for critical price level. Critical price level number 1 is the opening price of last year. So this year is which year? 2019. So what is the last year? Last year is 2018. So the opening price of 2018 of last year is the critical price level number 1. The critical price level number 2 is the closing price of last year. Okay, the critical price level number 3 is the high of last year. The critical price level number 4 is the low of the last year. We are on the yearly chart, okay? On the yearly chart, you must go to the yearly chart to do that. So this is the year of 2018, which is last year. Okay, so that's the opening price somewhere here. The opening price is at $4.50. The high, the opening price, so critical price level number 1, $4.50. Critical price level number 2, the closing price is $4. Okay. Critical level number 3 is the high of last year. That's $7.33. Okay. Critical price level number 4, that's the low of last year. That's $3.61. Now, the critical price level number 5 is the opening price of this year. What is this year? This year is 2019. So the opening price of 2019 for this stock, Gold Resources Corporated, EPIC GORO, GORO, all right? The critical price level number 5, the opening price of this year, 2019, is at a where are we? At a $4 critical level, critical price level. Don't laugh. It's like it's time to eat something, all right? Critical price level number 5, okay, is the opening price of this year, is at $4.02. So I have all those lines drawn already on my chart. You see the horizontal line. Okay, you can see that the critical price level number 1, which is the opening price of last year, is very close to the small median line. So how do we calculate the small median line? So if we're going to calculate the small median line, we use the 5 candlestick bar on the yearly chart. So because we are in 2019, we will not include the candlestick bar of 2019. We will use the candlestick bar of the last 5 years without this year. Because this year, 2019, we are not interested in that. So we go 1, 2, 3, 4, 5. Then when you see those 5 candlestick bar, you want to see what is the highest price level for all those 5 candlestick bar. It's this one here. So you draw it. That's what we call the smart high. And then you ask the next question, what is the lowest point for those last 5 candlestick bar, okay? And you say, is this one here? You just look and see where's the lowest point. Is this one here? You just draw it. That's what we call the smart low. So the distance between the smart high and the smart low is what we call the smart range, meaning the range between the smart high and the smart low. That's what we call the smart range. So sometimes the price may not be within the range. The price may not be near the six critical price, which means it may be above it. So they are somewhere below here, and the price may be going up there. So how do we handle that? All you need to do is to use a measuring stick of the range of the smart range from the smart high to the smart low, and then you just project it on top like this nicely, and you have another smart high here. So this level here is a copy, it's the projection of the smart high right there. Okay, this is the smart high here. Okay, so for this new channel that is above this one here, you see the orange channel. So this is the low of our top channel. This is the high of our top channel. So it's like we have a new smart low here, a new smart median line, and a new smart high here. And you can do the same thing again and project it up. I've done it already. Another smart high, another smart low, another smart median line. And the median line is the smart median line. So when we have the smart range, how do we calculate the smart median line? The smart median line is the most influential critical price level. We have in total 6 critical price level. Okay, so I talk about critical price level 1, 2, 3, 4, 5 already. So the last one is number 6. The 6th critical price level, or the CPL number 6, is what we call also the smart median line. So all we do, you can use Fibonacci retracement from the top of the range to the low of the range, talking about the smart range, and you highlight the 50% Fibonacci retracement. That 50% Fibonacci retracement, that's the orange line there, that's the smart median line. But if you want to calculate it, I'm going to tell you how you can calculate it. You use the price level for the smart high minus the price level smart low divided by 2 plus the price level for the smart low. Don't worry. To learn more about the 6 critical price level, go to www.dayprotraders.com, all right, and then click on Market Watch. I'll put the link also in the description section of this video. So when do we draw the 6 critical price level? At the beginning of the new year, usually, if today is the first day that the market has opened in 2019, on that day, we will draw all the 6 critical price level, and we can also project the range as I did now. I can draw all those lines the first day in 2019 when the market did open. So if I go quickly to the monthly chart, what was the first day when the market did open in 2000, January 2000. So this is the candlestick bar for 2019. Right? Let's go to the daily chart and see the first day in January when the market did open. Which day is this? Okay, what's the next one? Okay, the market did open on the 2nd. So the market did not open on the 1st. It did open on the 2nd of January. So on that first day, first trading day, you will draw all the 6 critical price level. Why? Because if you go to the yearly chart, you will be able to see the opening price, the closing price, the high, the low of last year, which is 2018 on that particular day. And you will also have the opening price level on the first day of the new year. And with all those level, you will note down. You can have a booklet if you trade some stock or you trade gold, you trade silver, you trade commodity. This is powerful stuff for commodity traders. Okay, so if you trade commodity, use the 6 critical price level. Also for forex traders, currency also is very good. Also for stock, of course, but it becomes more powerful if you are trading commodities and also currency. All we are doing, we draw them and we are looking for trading shekel on here, one of those key levels, as I show you at the beginning of this tutorial. Once you're done, okay, you can also now calculate the smart median line. So you go back now and say, okay, this year, 2019, so you don't count that, so you go 1, 2, 3, 4, 5. What is the higher point you draw? What's the lowest point you draw? And then you apply Fibonacci retracement. You highlight the 50% Fibonacci retracement level, and you have your smart median line, or you can calculate it if you want to be on the dot, and that's it. And then from there, Even sometime you can go to the lower time frame. You will see some of the lines that are drawn on the daily chart are still here. Those are critical price level. This one, 356. What's that? 399. Okay, 356. This is okay. It's near critical price level. So hold on, please. Now any of those key level, okay, are critical price level. All right. So what we do is this. What we do, you go you use a bit of color. Okay, you color code them. So when you change time frame, you can recognize them quickly. So like I've done it already here. This is the opening price. So I can just call them all in black. All right. Okay. So if you are color coding them, as I'm doing now, so to speak, if you use black, try to avoid using black for another line again so you don't get confused. So when you are like on the 5 minute time frame, scalping like a donkey all over the place, sweating, all right, you see the black line, you say, oh, this is probably one of the critical price level, and you can quickly go to the yearly chart and double check and say, is it really a critical price level? And you know that, okay, yes, for sure, this is a critical price level. So I have highlighted them all. You can see that the opening price, okay, which is this critical price level number 5, and the closing price, okay, which is the critical price level number 2, are almost identical here. You will see that sometimes when you have equality between the two, even sometimes 3 critical price level, so they all be in the same zone. All right. So that's why I didn't draw them, because they have sometimes you can see that okay, the opening price of this year and the closing price of last year almost in the same zone. You will see that very often. So you may have like these 4 lines, you see, talking about CPL 1, 2, 3, 4, 5, because 2 are almost identical. You only have 4 lines instead of 5. Sometimes you may have even 3 lines. Even the small median line may be identical to another critical price level. Okay, so now I know that those black lines that I have on my chart plus the orange line, those are okay, what I like to call high impact, okay, key level. So the prior usually will acknowledge there will be some reaction around, okay, high impact key level, and we want to know where they are. And critical price level number 1 to 5, most hedge funds are trading around those key level. Investors pay attention to those key level. Now, when you come to the small median line and the small range, this is my own proprietary trading tool that some people are not even aware of it. Now, it becomes a bit complex when we're talking about static way, all right, the static way of a stock that are more likely to break out or break down. So I'm going to talk about it because a TSGW SYS008 trader did ask me to go a little bit deeper with those topics. And I don't mind talking about that because I want to I can talk about it. In fact, I have a web page for it. Okay. So what I say to you, what I promise you is this. So you see now I'm on a 50-minute time frame, by the way. And you can see that you see on the 22nd. Look at this reaction here. Price pullback touches a critical price level, bounce out, blah blah blah. Look at that, and it's just acknowledging it on the 50-minute. Look at this narrow double top. Uh, this is just a nice, beautiful, okay, a sell a signal here. If you understand what is happening here, so the price came out of that triangle, display a lower high. So a lower high below a triangle, and because the reason why you can play this gently, scalping, don't get carried away if you're on a lower time frame like this. All right, gently you can just let's say 10 pip. Okay, you know that you are near a key level like this. You take a small 15 pip, wherever you are able to handle, combine that trading method, that scalping trading method, with a common trend line is broken, and gently, and see whether you get paid. And here, you will get paid nicely, yes or no. All right. So this is and then this another line, the channel that I draw on the daily chart. You see how the price was just bouncing around it. So this is what I'm talking about. The prior will acknowledge, this is what he's doing here, is acknowledging a key level. Say, this is a very important key level. We can't just go away from it. See how many times he touched that blue line? Look at this one. The same thing he did here, the same thing he did here. That's why you want to know where are those high impact. Look at that. This is again on the daily, on the hourly time frame. All right. Here it is. Okay. Yeah. It goes above. Look at this. It goes above the smart media line because you go on the hourly time frame like this and you color code it. You know what is that orange line, and you are just watching the reaction. You see, the first reaction you think that it's going to go up. So it climbed above it, depending on the time of the day. Okay, depending on the time of the day when this is happening. Okay, now it crashed through it, and then look at that, break below it, and then retest it. Now after, look at this one. Look at it. It's going around this lower low that are very close. Look at this lower low on the edge like that. So the price mask is going now. The price must form higher lows, higher high until it failed to form a new higher high. Now, not only that, it break below this trend line. Look at this trend line that was supporting on the hourly time frame, and then he retest it below on the edge of the smart median line. And here, so gently, you can hide your stop loss behind there and see what will happen. Sometimes they may kick you out. All right. So if they kick you out, you just blink and say, George, well, the next time I see you, we will have few words. Okay, now you say, all right, you say, okay, now you understand, okay? All right? And then it crashed down. Look at this is another. Did the prior acknowledge that critical price level? I told you the black line, critical. Hey, look at that, blah, 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 blah. So the first scenario, going to the mind of trader, that we say is continuation because it crashed down, it slowed down. So we say possibility that we may see a reversal. High volatility on the hourly time frame and a slowdown near a critical price level, we'll be seeing possibility that we may see a reversal. Price start forming higher low within that channel. See these higher lows here. So probably if you enter here thinking that it's going to go out, they may take you out. But you want to use a different time frame trading method to control the trade. So if you have a losing trade, you need to be careful now because if they sell it here, it become a bit tricky. You see now, become tricky now because those who sold it here want to take profit here, and there will be people here try to buy. All right, and you can see that they are just pushing it out. Again, here it slowed down again, acknowledging a critical price level. Now this is a nice setup. Now this is what we want. It break below it, and then try to retest it. Common center line is broken. We don't want a candlestick bar that is breaking a common center line to be too long. And then gently we see what's going to happen. And then this is the story now, okay? So this is what we want traders to do when they are using, okay, the critical price level. So right now on the hourly time frame, apart from the trend line that we draw on the daily chart that I already mentioned to you, okay, one can draw this again on the hourly time frame. So it's now in that rising channel. It's above our daily chart candlestick bar. Will it do what we were expecting, what I have mentioned to you before, going a little bit away more from this trend line, a little bit out, and then pulling back a little bit near the blue line, or will it do something better than what we were expecting? All right, this is it. So this will conclude our discussion today about the gold resources, stock analysis, proprietary trading tips and tricks. I would like to take this opportunity to thank the TSCWSY S008 trader who did ask a relevant question. Do you have a relevant question as a TSC trader? You know my Gmail. Please feel free to contact me. Or are you a subscriber? Want us to talk about a specific stock for you, to analyze a specific stock that I can. So if you are looking at a stock that I can see on TC2000 or TradingView, a stock that I can analyze from TradingView, trading platform, or TC2000 trading platform, and you want me to analyze it using the 6 critical price level, I'll be happy to do that. Okay, so you can also master it. But as I told you before, we can do more with the 6 critical price level by combining it with another, okay, advanced proprietary trading tool that we call static way, and so on and so on. If you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. All right. If the video has been truly useful to you, please let us know by giving us the thumbs up. If you say, George, the video is too long, and I will say to you, sometimes the video are too long. You say, George, I dislike the video, blah, 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 blah. I'm not in a good mood today. Or, George, I disagree with you. Feel free to mark the video down, okay? However, if you think that, George, well, that was worthy staying watching this video in full, 30 minutes. It's no waste of time. It's an essential tutorial. Feel free to share with your friend on the social media, okay? Subscribe to our YouTube channel for this tutorial. I'll post it at Day Pro Traders because we are talking about critical price level. So I'll post it at the Day Pro Trader YouTube channel. Subscribe to our channel and be sure to click on the notification bell. Ring the bell, click on the bell. All right. So anytime we record a new video, you will be the first person to be notified. My apologies, traders. I was thinking to keep it short, 20 minutes, but here we are talking and explaining more and more. Sometimes we talk longer to explain more to new traders, to beginners, to advanced traders, to strugglers, to doubters, and so on. All right, this is it, okay? Until the next time, enjoy yourself and be very happy. We are the TSTWS008 traders talking about gold resources, stock analysis, proprietary trading tips, and tricks. The financial instrument that we are analyzing today is gold resource, okay, EPIC GORO, Golf Oscar Romeo Oscar. Thank you for watching, and I will speak to you soon. Happy trading to you all.